Thank you for inviting me here today to come and talk to you all. It's a pleasure to be here. There's myself, Andrew, one of the partners at Howard Worth. If there's any technical questions, we've got Keith here as well. Who's, any technical questions, Keith will answer them basically. But just a bit about Howard Worth first of all. If you've not heard about us, we do act for a number of charities in the local area. Offices at Nantwich and at Northwich. We've been going since 1953, and we look after the full service right the way through from doing people's payrolls to helping people with setting up their accounting systems, and then preparing the year-end accounts, doing the audits, talking to them about trading subsidiaries, all sorts of things that we can help with on the charity front. And not apart from that, we've got a wide range of other clients as well, right the way from business startups to large established businesses as well. So there's myself that looks after the charities for the firm. That's one of the partners, one of the audit partners, but also Keith here is in the audit and corporate team as well, who also looks after a lot of the charity and the audits as well. So I've been asked to talk about a few things today. Trustees' responsibilities and reporting requirements are two of the main things that I'm going to talk about. Restricted and unrestricted funds, people obviously don't understand the difference between the two, and obviously that causes problems in the accounting, and a little bit about forecasting and cash flows as well, just at the end, not a great deal. I've got a lot of slides from been doing these sorts of presentations a long time, so I might skip over a few just because we're tight on time today, basically. So, but if anybody does have any questions, it's a small group, so shout out while I'm doing it, basically, because it's good to have some chit chat. So, more than happy for people to ask Keith a question while I'm going through the presentation.
Sorry about this noise. We're trying to stop it at the moment. It's just started. I don't know where it's coming from.
So, trustees' responsibilities. Just out of interest, who is a charity trustee or who is looking to be a charity trustee? So, most people. And are you long-established trustees or relatively new trustees? You're new? Newish? So just as a start... Long. Do you want to tell everybody? So, what's your expectations of what your sort of responsibilities are already? Has this been discussed in your own charities? Have you had any training on what you are due to do and what your duties are? What's your understanding? Anybody?
I'm a trustee and work for CVS, so it is a trustee training, but it's about being everyone is equally responsible for the finances of the organisation in terms of finance, so they need to all understand it well enough to be able to query the accounts and what's being spent and what kind of reporting and things like that.
Yeah, I mean, you've hit the nail on the head there. I think you are equally responsible not only for the finances, but the charity, basically. It's your responsibility, the charity is your responsibility to look after, to make sure it is doing what it is supposed to do, to make sure it is functioning correctly, to make sure it is safeguarding the funds and the money and the income and the people that it is there benefiting as well. So, it's not just the finances, it's the whole kit and caboodle, basically, that you are responsible for. You did hit then on a very important point, that it's your responsibility to make sure that you know about everything, including the finances, and not just let Sam, who's always done it for the last 20 years, get on with it and do the accounts and do the year-end accounts. It's the trustees' responsibility, all of you, to question, to make sure you understand and make sure you know what's going on and how things are running in the background, because you're all responsible for that, not just Sam, who's been in accounts doing it for the last 20 years. So you've got to be clear on that you've got to have an understanding of how the accounts work, where the money's coming from, where the money is going, and what is going on with it, and make sure that the charity is running correctly and having the right controls in place. So it's a very good point, because in a number of cases you see you know, people don't understand the numbers basically, but everybody should. So that's the first thing just to take on board as a charity trustee. Okay. So it's having that awareness, as I've just said. You know, get yourself up to speed before you actually become a trustee. You know, do some training. What risks do you have as a trustee? Because effectively, you know, you could be liable for that charity's misdoings, basically. So depending on what sort of charities, you've got to be very careful. You are aware of your liabilities as a trustee as well. So think about what advice you need to take. Who am I accountable? You know, get up to speed, go on courses, look at the Charity Commission website, basically. Okay? So have a think about all of those things as charity trustees. Okay? Is that a surprise to anybody, or not? The accounts and the numbers, that people were happy to do that and question as well. So, one of the big confusing things that I think a lot of people don't understand when they're looking at the numbers is funds, and understanding the basics of what is an unrestricted fund and a restricted fund. Any initial confusion over that before we go over it, because it is a key thing that a lot of people get worried about or don't understand. Looking at this little diagram I've got here, you've got the two main types here, unrestricted and restricted. So unrestricted funds will be money that can come in that can be used for any purpose in the charity, basically. Okay, you know, it is there. There's a donation that comes in. There's no restrictions put on it. They've not specified what it needs to be used for. Restricted funds, you know, that money has usually come in. The donor's specified when they've made a donation, it's to be used for X or it's to be used for Y or a specific project. It has a specific purpose, basically. And therefore it's important that purpose is recognised, that when you do the accounting, that is kept as a restricted income and it is spent on that expenditure, and that income and expenditure are kept tally of, basically, in the books and records of the charity. Does that initially make sense? Okay? So unrestricted and restricted. And when you're looking at a set of accounts, you know, the income and expenditure is usually restricted by, usually shown as restricted and unrestricted, and the balance sheet is usually shown as restricted and unrestricted as well, so you can see, you know, what the split is. So ideally, you want all your money coming in as unrestricted as trustees. You don't really want money coming in that is restricted, because you've got the choice then to use that money in your charity for that purpose. It does not have a restriction that you've got to buy a bed for the daycare unit or you've got to do something with it. You want it as unrestricted. Okay? So once you've got your unrestricted funds, you can make what's called a designation out of that restricted income. So it might be that you know that you need to replace a minibus in 18 months or 2 years, and you're just building up a sink fund for that in 2 years' time. You're designating some of that restriction to that designated fund. Okay? That doesn't mean that you have to spend it on that in 2 years' time. You can undesignate it and move it back into, you know, it's just part of the unrestricted funds. Does that make sense? Okay?
Sorry, is there a time limit on that, did you say?
No. No, a designation is just a subpot of the is a subpot of the unrestricted fund.
Okay.
You know, it is just there. There's a project that you know you want to do that you're going to designate some of the unrestricted funds to. Okay. But no time limit. Okay. It's really these two are the two main types of funds that you'll be worrying about. There's some endowment funds and things down here that, you know, we don't get to see a lot of, really, but it's just the unrestricted and restricted funds that cause the main problems, and then designated out of the unrestricted. Is that okay?
Do we have to make a statement in the accounts of the funds being non-designated as a total sort of thing? Because
non-designated, you don't, do you? I don't think. We've got people that designate the funds but have it noted in their trading accounts, not trading, but their software basically, or their spreadsheets, however they keep their records.
Yeah.
Effectively, what we call material fund balances. So
Yeah.
if you've designated £250,000 for a roof, and there's a designated fund for that, you want to be explaining in your notes what that fund relates to.
Yeah.
So it's material funds that you have to explain.
If it was £250 for a photocopier,
You're talking my sort of language now.
you might not bother putting it in the actual statutory accounts because it's not actually material to the
Right.
charity.
And it's the same with your restricted funds as well. If you've got 20 restricted funds, you don't need to disclose them all separately on your statutory accounts. Disclose the material ones, but all the others can be grouped together as other restricted.
So by material, yeah,
Material depends on the size of the arrangement.
Materiality is a concept that we use as auditors, basically.
So if your income's 250,000, then material would probably be greater than 5,000 probably.
So it means it's significant.
Significant, yeah, significant.
Yeah.
You know, when we're doing an audit, we work out materiality by way of a formula, but it's what is going to affect the user of that account, those accounts basically, to make them understand how what the charity's doing and how it's running its accounts.
Yeah.
What is going to, always think about that end user and what they're going to see in your
Yeah.
statutory accounts. But there's no point putting something in, showing a £250 designation because it's just not, it's not relevant. It's not relevant. You'd still keep a note of it internally, but when we're doing the statutory accounts, it just makes, the more and more of these different types of funds you have, the more and more complex it is, which is why we group non-material things together. Okay. So, is everybody just, before I explain the next slide, are you all happy with the different types of charities that you can have? So you've got, unincorporated, incorporated charities, all different types of charities, basically. So that this slide basically just explains what the accounts requirements are for the different sizes of charities. And you can see it is quite complicated. So it does get quite intense. So if you've got basically just a straightforward set of accounts where you don't need an accountant to sign anything off. You've got an independent examination where, depending on what level of turnover the charity has, it does need a qualified person to sign the independent examination. If it's below £250,000, you don't need a qualified person to sign the independent examination off, but if it's over, you do. And then once you get up here, you've got audits, basically, so you then have to, find an auditor like Howard Worth who will actually go into the accounts and do checks and balances and pick a sample of transactions of income and expenditure and debtors and creditors and make sure that we're happy that the accounts are then showing a true and fair view. Okay? So it is quite complex in terms of the different levels of different levels of disclosure that you have to show. This probably is, down at this end, one of the key areas I see a lot of charities where they do fall over, because some of the charity accounts I've seen going off to the Charity Commission, where it's a small unincorporated charity where the disclosures in the accounts just don't stack up, basically. They don't match up with what the simple disclosures are that they need. So it's at that end of the market, that end of the size spectrum, I think the problems are, because up this end you've got qualified accountants that are basically giving them advice and doing disclosure checklists, making sure everything is as it should be. I did see a set of accounts at Charity Commission that had no charity number. It didn't list out who the trustees were. There was a whole, about 10 or 15 things wrong with the set of charity accounts. And it was down here, it was a small set. They didn't really know what they were doing, basically. So even down at the bottom there are disclosure requirements. There are things that you have to make sure you are telling people and make sure that you've got in your accounts. Okay?
And how does Charity Commission react under those circumstances?
I don't think they have the manpower to even look at them.
Right. Okay.
But you
Is
have
the honest answer.
Okay.
But you have the online form now when you're filling in for a small charity account. They have that on the Charity Commission website, so
Okay.
it's very straightforward,
Yeah.
even if you've never done it before, because I've looked at it before and gone, oh, right, okay. Because it helps you fill in your annual return and your annual report, and it's nice and simple. So they're quite helpful.
Yeah.
That's quite helpful.
I mean, we've seen it before where you are a limited company charity. You know, you have to send your accounts to Companies House and to the Charity Commission.
Yeah.
Sending accounts to Companies House, I think they're a lot more on the ball with rejecting, you know, deficient accounts, whether it be charity or normal trading companies.
Mhm.
But I think the Charity Commission, I don't think there's just the time to look at all of these things.
Okay.
And you've got to think as well, it's this end that's
Yeah.
causing the problems. You know, in the public interest, is that really going to cause a big problem? Whereas they'll be focusing on problems up here, you know,
Oh, fair enough.
that
Thank
has
you.
a public interest, real big public interest problem, basically. So
Okay.
I know I shouldn't say that, but that's life, isn't it? You know.
I think that's our view too.
Sorry.
That's our view too.
You know.
Can I ask a
That
question about
over
the
there.
scrutiny? So, if I was a charity earning £25,000, I could, with the turnover and that, I could do the accounts, the board signs them off, and
Send them in.
they send them in. No one else looks at them. So between 25 and 250k, I could prepare the accounts, I could get my neighbour to look at them, sign them, send them in. In terms of who's the independent person and the independent examination, what qualifies?
I always say to people that if you've got an independent person where the charity is less than 250,000, you know, it might be an ex-bank manager or somebody with some sort of knowledge and finance background.
Okay.
If your next door neighbour is a welder that works down the, you know, the works,
Yeah.
it's not really a suitable person to be an independent examiner.
So where do you find that out? Is there a somewhere that says this is so like when you do your passport form, there's like you can get this person to sign it off. Is there that list anywhere?
I don't think there is, Mr. Keith.
I think as well, I think when you have a charity, if it's going up to 250,000, you'd be hoping that on your trustee board you'd have somebody that has some kind of monetary background, because you want one of them anyway. So
You are,
hope
but the
someone has
independent
a-
examiner has to be
independent.
independent.
It has to be independent, yes. True. So
It
you
can't
have
be
to
one
have
of your
friends.
trustees.
Yeah.
But you'd hope that one of your trustees knows somebody
So, yeah.
that would be able to do
Yeah.
that for you, because it would have a relevant background. You'd hope.
Okay. So we're encouraging people with a financial background of some scope. So
Definitely. Definitely. And then above 250, it's got to be a qualified accountant. Yeah.
But it doesn't have to be. Does it have to be a qualified accountant that prepares the accounts, or
No.
just that has to sign off the independent?
Correct.
examination?
Yeah. So you can still prepare the accounts. You know, in here, you could still prepare the accounts as a charity.
Yeah.
But then the independent examiner would basically get your file of workings, should be checking what you've put in them, that everything matches up, that there's backing papers behind it, and then there's an independent examination report that they sign off on.
Okay.
What about if your organisation's income, say, fluctuates, say between 250,000 and £1 million, it goes over £1 million 1 year and then goes back. So how do you deal with that? Because you could have charities that sort of fluctuate on the sort of cusps.
It's numbers, there's other things as well, not just the million key thing around it.
I think with charities, because the limits are different to a normal company, it's basically if 1 year your income's over £1 million, next year it's not. If it's over £1 million, you need an audit. If it's not, you don't need an audit.
So you could go 1 year you need
Yeah.
an audit and 1 year you don't.
Yeah.
But I suppose for consistency it might be better to keep it the same.
Cost of more, but if
Well-
you've got $1 million turnover, it's the cost of more that's going to
If your turnover's at £960,000, and you think next year it's going to go over to £1 million, you might just have, you know, and it just dips 1 year, it's probably easier to continue just to have an audit. Because if you think about it,
Yeah.
as an auditor, and I'm auditing that turnover with £1 million the next year, but you're 960, I'm signing the accounts off, not just that 1 year, I'm signing the whole set of accounts, which includes the comparatives. So I'd still have to probably do some work on that year where you've got £960,000 worth of turnover.
But when you're talking with that sort of region, you're a substantial organisation, aren't you really? It's not really worth the risk, I don't think.
Well, at that sort of level as well, you'd be probably going for external funding, and you'd probably want that scrutiny to add weight to your grant applications, and
Yeah.
so it's just, you've got to consider the needs of the charity as well. Because, you know, just because those limits are there, you know, there might be a charity that wants an audit that's only turning over 500,000 because of that level of scrutiny that they want as a charity.
We do sometimes, don't we? No, we do. The trustees request an audit even though they're below the name.
It's another layer of confidence, basically, for trustees. Okay. So we've talked a little bit about the numbers, but there's also one key document as well that always creates a lot of discussion with charity clients, is the trustees' annual report as well. And what goes into it, what should be disclosed, what you do put into it, what you don't put into it. So it is an important document. A lot of people will read that before they read the numbers because they get a feel of what's going on in the charity from the trustees' annual report. So it is a really important document for you guys to get right, and that is your part of the accounts to prepare. It doesn't always happen like that, does it, Keith? Because sometimes it gets laid on our table, but we should not be preparing the trustees' annual report. It's your report, basically. Okay. So, you know, what are you spending your money on? What have you achieved? What haven't you achieved? What are your aims and objectives? What's your successes and failures? Where is your money coming from, basically? Tell the story all about the charity. It's key. I just wanted to, I've got a set of accounts here actually. One of our clients, Age Concern. These guys, just wanted to talk about them this year. They have thought about what they are doing as a charity this year and have restructured their accounts internally and these external accounts into what they've called ambitions, 5 different ambitions. So previously they used to report on, you know, the money, where the money was coming from, the grant or the source of the funding, but now they're reporting on their ambitions, their 5 ambitions. So they're reporting their income and their expenditure on the 5 ambitions. So their SOFA and their balance sheet is a lot more easier to understand in terms of what they are doing as a firm, as a charity. But they have also then restructured their annual report as well to centre around the 5 ambitions as well. So they're showing what they've achieved and what they've not achieved and what they're going to achieve around these 5 ambitions. So I was really impressed with this year. It's a really good way to set out a set of charity accounts. So it's just an example if somebody wants a quick flick through that afterwards. Okay. We've got some more charities now going down the same route, haven't we, basically?
And that'll be on the Charity Commission website when it's out.
Okay. So, just a few notes here for trustees, just to highlight. You know, ultimately, it is your responsibility to be fair and objective and to be independent. You are there for the benefit of the charity, not for yourself, and you are there to ensure that the money is spent for what it was intended. So underlying everything, those are the sort of key bedrock that you should be thinking about. Okay. Let me just skip through a couple there, yeah. So, I mentioned before about trustees, and sometimes it's, they could be liable, they have responsibilities and could be liable. It is the trustees that run the charity, not your advisors, not the Charity Commission. So always think about, if you're not sure about anything, take advice, think about what's going on. But also, if it goes pear-shaped, what could you do to mitigate that risk for yourself? Well, there's insurance that you could take out, so always think about that, to think about protecting your own positions. So just consider that and how relevant that might be to your own position as a trustee.
Do you have to do that?
You don't have to do it.
I mean, we do, but
You don't have to do it at all. It's how yourselves as trustees feel about that risk position for yourselves. So, I think we've all had challenges over the last decade or so, and I think there's challenges to come over the horizons as well, basically, with funding, not only in charities, but normal trading businesses seem to be feeling the pinch at the moment. Every day, I think, at the moment, we're seeing some other high street brand going to the wall. So it is, potentially hard times again round the corner. There is reduced funding there, and more and more competition, basically. So, as I said before, think about what information you are keeping internally on a regular basis, making sure your accounts internally are as up to date as they can be. But also, that ease of getting information out to funding sources to show what you're doing with the money is important, basically. So, talking about risk, unincorporated charities, again, it's the individuals that are at risk. There's no protection when you've got an unincorporated charity. So, you have to consider those structures very carefully. Is it the right one for you, being an unincorporated charity? Should you be thinking about your charitable structure, whether you incorporate it or whether you look at using something else like a CIO, which might be more suitable for your charity? But it's one thing to think about. So, incorporated charities, it is a lower risk, but if a trustee is acting dishonourably or incorrectly, you will be at risk anyway, basically. So, if you are doing wrong, then you are doing wrong, whether you're doing it in a limited company charity or an unincorporated charity.
What's
Misfeasance, if you are trying to do the right thing but you've done it in the wrong way.
So you're not consciously mismanaging the funds, but you accidentally done so?
Or you might be consciously mismanaging the funds to try and rectify something that's not right, if you know what I mean. I think that's probably the best way of describing it. The other thing to consider with incorporated charities as well is who is a trustee or who is a director. Because if you have got somebody that is purporting or making decisions or is acting as a sort of a shadow director, or are holding themselves out to be a trustee director but might not have been properly appointed, they are at risk as well, basically. Just because they are not registered at Charity Commission or registered at Companies House doesn't necessarily mean that they are risk-free. So just consider other people within your organisations that perhaps are making decisions that aren't properly documented or aren't properly going through the right channels, basically. That's just as relevant to normal trading companies as it is to charities. Okay. So, I'm going to move on to talk about sort of forecasting and cash flow and budgeting in a minute, but it's relevant to any business really, you know, and you see the big names that fail. What is an insolvent business or what is an insolvent charity? It's the inability to pay your debts as they fall due, whether it's a charity or whether it's a normal business. So if you have an awareness that the charity is unable to pay its debts, you know there is a problem basically. If you then continue to try and make things right and continue to trade without taking advice, there is a problem there with wrongful trading, that you know that you should have done something, you know there was no prospect of saving this, and you've continued to try and trade through it or continue to try and get the charity to continue in its operations. So be very careful about that position, because as soon as you have that inkling that there is a problem, you need to be taking the right proper advice on it.
And what's that? Talking to an accountant?
Talking to an accountant or an insolvency practitioner. Yeah, insolvency practitioner really. You know, there might be a plan there to actually make things right. It might be that it's a short-term cash flow issue. You know, it might be that, you know, you're waiting over some income coming in, but it might be 6 months down the line. But is it guaranteed that it's going to come in or not? You know, you've got a problem there basically. But you need to be shown that you're doing something to take advice, that you're protecting yourself. So, I've said that, take professional advice. You've got to be careful that you're not paying people in preference to other people. It's all about the decisions you're making sure that you are happy with the decisions you are making, documenting it properly, and showing the advice that you've taken when there's a problem. Okay?
Would you have to draw up a list of secured creditors in that case, or?
Well, your accounts should show whether you are insolvent. You know, if you've got good management accounts, you should be able to do that from your internal management accounts.
But who would you designate as a secured creditor?
Well, a secured creditor is somebody like if you have property on your balance sheet that you borrowed money from the bank for, the bank is a secured creditor because they've secured that against the property.
Yeah. Well, that would be listed in your account.
Secured creditors will be listed in your account, yeah.
We don't have any, so it doesn't. No.
They should be.
I'll be careful not to. Then.
They should be. But I think the revenue, they've just made themselves preferential creditors, haven't they? After many, many years of not being a preferential creditor, I think they've just made themselves preferential creditors again. They used to be preferential creditors years and years ago, and then they changed, but now they are preferential creditors again. So for normal trading businesses, we're going off track here a little bit. Now, if a normal trading business goes under, the Crown will basically have first dibs. They're not secured creditors, but they're preferential creditors, which has now made banks a little bit twitchy because they're getting pushed further down the queue, basically, where there's borrowing involved. Okay. I just highlight our role, or accountants' roles as well. Remember, we can't make the decisions for you. You are the trustees, basically. So, you know, sometimes people tend to get a little bit too involved in their clients' affairs, but we cannot make those decisions for you. They are your decisions. So you must be very clear, you know, on the advice that you are given. And also, if I was giving advice to, say, an internal accountant at a charity, you know, that needs to be, I need to make sure that the trustees actually get that advice and it just doesn't stay in Doris's top drawer as well. So just be making sure that the actual due process is followed if there is anything to discuss that's important. Okay? So, I went down to NatWest seminar in London about 3 or 4 weeks ago, where they had their national economic chief guru talking basically, and he was predicting that we would be in recession early doors next year, and he was also predicting that interest rates would be cut as well as a result of that. So, you know, perhaps we are in the economic downturn at the moment, and charities aren't immune. So it's I think we all have got to look to batten down the hatches a little bit, on, you know, even more so whether we're a charity or a normal business, normal trading business. So just bear that in mind when you are doing your planning, looking forward, basically. But one thing I would say that's important is when you're bidding for contracts, you're not underbidding, you're not lowballing, basically. You know, that there is no point getting something that you are not, this is not economically sustainable. Okay, so if there's one key thing that you take from that slide is make sure when you are bidding for contracts that it is going to give you some, you know, you're going to cover your costs basically, and just think about the reinvestment that you've got to make in, you know, your fixed assets basically. So just make sure you're very key on that. So, a few strategies to help cope. Look at your core objectives. Sometimes you can get sidetracked on other projects and other things that are going on, so focus on your core objectives and your core projects. I've mentioned about clearer reporting, making sure that the management accounts are up to date and that you can give people the numbers and the figures when they want them. Think about upskilling your trustees, making sure that they've got the right skills, making sure that everything is fit for purpose, basically. Okay. If you do want any further information about the regulatory framework, audits, non-audits, what to put in a trustees report, there are some good help sheets that you can download off the Charity Commission website as well. So there's some really good help sheets on there. So go and have a look at the Charity Commission website. Okay. So, last few slides, I was going to talk about budgeting basically. I think budgeting though has to be looked at in the wider context about what the overall aims and objectives of the charity are. You know, budget lasts for 12 months, but you've got to be perhaps thinking about a 3-year plan for the charity basically. So, and a budget for 12 months might fit into that, but I don't think you can actually pull a budget together for longer than that. There's just too many uncertainties at the moment, whether it's charity or a normal. So it's a plan basically. And when you're thinking about budgeting, so when you think about budgeting, all of these are the reasons why you're doing it basically. But it's about really setting those key targets and making sure that everybody is aligned to it really in the next 12 months. You're showing where the charity is going to get to and how you're going to get there. So not an easy thing to do in any business basically, or charity. So where should we start? What should we do first of all? Initially, we have to think longer term. What are the aspirations? What are the objectives? Where are we going to get to? So think about the longer 3-year structure, basically, to give you some aspirations, and then break it down. Look at the next 12 months. Look at the budget. You might start off with what you did last year and what worked and what didn't work, and add some inflation onto it. Or you might look at what income streams are coming in and then look at the top-down approach, basically. So there's different strategies that you can make when you're starting off with your budget. Generally, people will look at last year's numbers and roll them forward into the next year. But so you'll do an income and expenditure budget. That, though, doesn't reflect in actual cash flow. So the two are different things. Your income and expenditure budget is different to a cash flow, because in a cash flow, you will have other expenses going out. If you've got a property, there'll be loan repayments going out of the cash flow. There might be assets that you need to buy as well that will be going out of the cash flow, which will not form part of your income and expenditure. So consider those things as well when you're pulling these things together. So with that in mind, you might want to break it down into sort of a revenue budget. So your income and expenditure, so your income that you're going to need to pay the staff salaries, pay the rent, all those sorts of things. You might have a capital budget, so it might be, what fixed assets are we going to be buying, what equipment do we need, so that's a capital needs budget. But then those all tie in together in terms of a cash flow budget for the overall needs of the charity, basically. Does that make sense? Okay.
Sorry, so can you go back? You said, so in a cash flow, you might have loan repayments or things you're buying, and it wouldn't be in your budget. Is that because you're saying that that's the minutiae of kind of...
I'm saying that you have an income... if you're thinking about income and expenditure, you'll have your income... You'll have an income and expenditure account, basically, in a set of accounts, which will be things that... income that you get to pay the wages, to pay the rent, to pay the heat, the light, the electricity, but then you've got a capital budget as well, basically, because there's two different types of... When we do the accounts, you've got a balance sheet and an income and expenditure account, so there's two different things. So your fixed assets don't go in, the income and expenditure account, they hit the balance sheet.
But you would say loan repayment, which is against the capital thing, but...
the loan is sitting on the balance sheet as a liability, so the repayment would be paying those loan balances, that loan off.
You wouldn't put that in the expenditure then?
Not in your income and expenditure, no, because it's not a service, is it, that you're like a heat, light, electricity. It's actually just paying that loan repayment. You've had the loan in to buy a property.
Yeah.
I think what sometimes is useful is having your income and expenditure budget at the top, and then you can tack on your capital budget at the bottom. So you've got a total expenditure line, because you want to see whether you can afford those fixed assets out of your income during the year, don't you?
Yeah.
So if you have your income expenditure budget and net surplus deficit on your trading activities, then whatever the net surplus deficit is there leaves you funds potentially to spend on the capital.
Okay.
Because you can only fund new fixed asset additions or loan repayments out of what you're generating.
Actually,
surplus.
Yeah.
Which is what I was getting at before, is if you're lowballing for your contracts, you're never going to have enough surplus to pay for all of these things that the charity fundamentally needs to have infrastructure to make it function. But you're quite right. That probably would work well, that you've got your income and expenditure budget showing what surplus you've got, and then your capital budget at the bottom, basically. Does that make sense?
Yes, thank you.
So, a couple of key things there, just to think about when you're preparing your budget. And again, it's important, I think, when you are getting grant receipts in, what is that grant actually for? Is it for capital items? Because that affects the treatment in the accounts and in the budget as well. Does the budget have to, when you receive that money in, does every last little penny has to be spent? I would always suggest that you do a 12-month budget, but keep on updating it every 12 months, basically. So this time of year, we're looking at our own budgets for Howard Worth for the next 12 months, basically. So making sure that we're getting them approved and signed off well before the year starts. Who is accountable for the budget? that kind of depends on how your charity is structured internally and what size it is really. Because it could be that you're of a size that you don't have a sort of a departmental structure or a team structure, because generally each team would be responsible for their own budget. If you're a small charity, generally you'd have one trustee that's responsible for all the finance, so it just depends really how your business or your charity is structured. Ultimately, it needs to be somebody that is accountable and responsible for spending the money or not spending the money. So again, it's important to have that infrastructure. And you might do that in a variety of different ways. It might be that, if you're a small charity, that at each trustees meeting, a list of things to pay are brought to the meeting and they are approved by all trustees at that meeting. Or it might be that the finance head, looks after that internally. Or it might be that the departmental people in charge of the departments have a budget that they are responsible for. It's what works for you as a charity and as trustees. Okay? But it's got to work, and there's got to be some hierarchy of responsibility so that people are taking control. Okay? I've talked about the different methods of budgeting already. Are you starting from the bottom and working up? Are you starting from what income you're getting in and then fitting the expenses to that income? Do you assess every line as if it was never been spent before in the previous year? Or do you just look at last year's figures and add some inflation on? So there's a whole heap of different ways that you can look at budgeting. When we've done all of these budgets, I think that the one key thing to then think about is how you are actually reporting your monthly income and expenses against it. Because it's all well and good just preparing a budget and thinking that's great and putting it in the top drawer, but you should be using it as a tool every month to see what the state of the finances are for your charity and what actually has come in and what has actually been spent, and are we on plan here. So don't think it's just a one-trick pony that you've done it at the start of the year. It is a living and breathing document that you need to be thinking about every month and updating. Okay, so I would always, sort of suggest that every month, you've got your budget and a variance basically, so you can see what you have or have not spent. Okay, just so you can see where things are. And that can be tied into what your actual bank balance is compared to what your predicted bank balance was going to be in the budget. Okay. What I would say is that when you are doing this, there will be different options as well. There will be things that are important and urgent that need to be made a priority. There are other things that might be nice to have in the budget that is not important or urgent at all, but always remember that resources are not infinite. So you've got to think about what is going to give you the best results for the limited resources that you have. Okay? So just bear that in mind when you're looking at your budgets and looking at your projects. Okay? So this slide is relevant to all organisations, and it's turnover is. It's always the phrase I always used to think of. Turnover is vanity, profit is sanity, and cash is reality. Is the phrase that I tell all of my clients. Basically, cash is king, we must be really, I say paranoid basically, but impress upon people how important it is that we know where our cash position is up to, because it's not only in your sector but across the board. People are taking longer to release money, people are not letting it out of their grip as quickly, so it's really difficult to get hold of cash basically. So I think this making sure that we're strong on budgeting and strong on managing cash flow within all organisations is key. especially over the coming couple of years. It's been vital in the past, but I think it's going to be even more so over the next couple of years. Okay.
What level of reserve would you expect to have? To be able to ride over these things very easily?
That's a very good question. I can't answer that without knowing about your charity, to be quite honest with you.
Yeah.
You know, have you got a payroll of 100 people, or have you got 2 people on your payroll?
None.
You know, what,
Very carefully.
it's a real difficult question to answer,
Yeah.
to be quite honest with you. It really does depend on your own circumstances.
Yeah.
You know, if
Would
you've
you
got a
expect to
whole...
keep 3 months, 6 months worth of income?
I mean, people always used to say 6 months worth of expenses to wind the organisation up.
Yeah.
But you know, you've got to think about your own circumstances. You know,
It's unlikely that the income would stop immediately.
it is unlikely that, but you know, again, you've got to think about redundancy payments and all these sorts of things. It's just
It's very simple. Yeah.
But that's a discussion you ought to be having yourselves at your trustees meeting, and when you're preparing your accounts, is something you ought to be taking into account.
Well, we do. I mean,
Is your own
we've got
circumstances.
6 months. We said.
Yeah.
There's no reason why it should be 6 months.
Yeah.
Because we could invest it.
I mean, going back to those designated funds, sometimes that is why charities do put some money aside into a designated fund, purely because their reserves perhaps is in excess of what their stated policy is, but they know they've got some projects to spend it on basically in 6 or 9 or 12 months' time.
Yeah.
So that's one reason we do see people using designated funds as a reason to sort of manage that.
Is that when you come to the term free reserves then? So you've got free reserves and designated reserves, is that?
Yeah, I mean, if you think about it, as an unrestricted fund, some of that could be land and buildings. It's not available free cash.
Exactly,
Yeah.
yeah.
So, you know, sort of your free reserves might be reserves that you are able to access readily.
Okay. Yeah.
And that land and building, you can't.
Okay.
So when you're talking about free reserves, you know, that's the sort of concept of, yeah, effectively.
Is it right that land and buildings we can't liquidate at any stage as a charity?
You could liquidate land and buildings.
Depending on how they're bought.
What do you need them for, though? You know, if you've got land and buildings that you don't need in your charity, that you could be using those funds better spent elsewhere, or providing, you know, facilities or services to the beneficiaries of the charity, then you've got to think, is it necessary to have that land and buildings on your balance sheet? Sometimes land and buildings could generate an income for the charity that is used for charitable purposes. Again, if there was an endowment there that left the land and buildings to the charity to generate an income, you know, there's a reason for the land and buildings being on the balance sheet.
Oh, I understood that land and buildings, that we don't own any, but if we had, and the charity folded, that the asset would have to be passed to another charity?
Potentially.
Yeah. So we could liquidate it.
We've had one recently, haven't we, Keith? Where the funding sources sort of dried up where they were. They owned some property,
Yeah.
and they did sell the property, but then all of the funds have been used to pay to another charity with similar aims and objectives.
Yeah. But it didn't stop the charity from liquidating in the first place.
No.
Yeah.
No. It's all based on your own circumstances, you know. It's difficult for me to give answers when we you know, but so just to wind up, it's just gone, coming up to an hour, so just to highlight, managing a budget and managing cash flow is always hard work, but I think it's going to be one of those things that's going to be ever more important in this current economic climate going forward at the moment. So it's key that you've got good management accounts, good records, and you know, somebody that is on the case with that. that knows what's going on, so that they can keep everybody, all trustees, informed of where things are up to. So you are going to need both, everybody will need the help of the rest of your organisation to do that. That's going to be one of the key things moving forward. So just wanted to say, if anybody needs any help and assistance, we are there to help and give some advice if people need that. We're happy to have a chat with people on an informal basis, even if it's just acting as that second port of call. If there's something you want to run past us that you're not quite sure about, if your current accountant isn't a charity specialist, come and have a chat to us and bend our ear about something. If you want half an hour and a cup of tea just to talk about it, we're always there to come and help and support. So feel free. Is there any other questions at all? Are there any other questions?
A question about software, really. I'd appreciate that you're probably not in commission with Xero or Sage or anything else, but is there any particular piece of software that charities tend to use over others, or not?
There probably isn't, is there, Keith, that one uses over the other? To be quite honest with you, we've seen all sorts, from Sage to QuickBooks Online to Xero to a lot of different ones in between. So I'd probably say there isn't a piece of software that we would say that charities are using in preference to others.
Okay.
We are Sage partners, and we also, but I have to say, a lot of people are now using Xero. We're Xero Platinum partners as well.
Okay.
I like Xero. It works very well.
No, I agree, it does. And it's always up to date, Xero, so it's probably cheapest, well, it's definitely cheaper than Sage.
Yeah.
Yeah, I'm familiar with Xero. So
Yeah,
it's very transparent. So
It works well. And it's great for us. If you've got a problem, we can log on, we can have a look, we can, put an entry through if you need us to do something on it. Rather with Sage, it's just a little bit more convoluted.
One final question.
And Xero's in layman's language as well, do you know what I mean? The way it's all laid out.
Yeah.
Whereas you probably need to understand double entry bookkeeping if you really get to grips with Sage.
Okay.
So.
The other question really is related to, do you have a scale of charges then against I'll call it a turnover within a charity, or is it just literally come and have a chat with us? Okay.
It is. It doesn't kind of work like that, to be quite honest,
fair
because there's, how many restricted funds have you got? Who's doing the bookkeeping? Are the records in good order?
Yeah.
How many staff have you got? All these sorts of questions. There's a number of different factors. A menu system works well when it's a small one-man band limited company where there's two people on the payroll, but it kind of doesn't work when it gets any bigger. So it'd be a question of coming out and having a chat.
Thank you.
Okay.
Is there a time limit on moving restricted funds into unrestricted? Or can you?
Well, a restricted fund is a restricted fund. Period. You can't just move it to unrestricted. Have you satisfied the restriction?
Well, I think the restricted fund in our case was actually, we called it restricted. I don't think it was specified by the donor that it was restricted.
Sorry, say again?
So is that designated not restricted?
Correct. You need to be very sure where that money came from, because it might be that you have inadvertently called it something that it is not.
Well, I think we have seen, and I'm just, okay.
You need to go back to...
I know where it came from, so that's what I mean, we just go back. Nice. Okay.
Is the donor allowed to ask for his money back, is the other question?
Well, exactly. Well, we don't know. I don't think he will. He's not interested. He hasn't been for a number of years. It's sat on the books for 5 years now, and he's shown no interest whatsoever.
I think you have to write to the Charity Commission if you want to do anything with it.
Okay.
And they might say you need to pay to another charity or do something with it.
If I was in your shoes, I'd be going back to the original source first of all and finding it out and clarifying the original intent, if there was one or not.
Just something you put on one of your slides, which I think is worth pointing out, is that you said something about a restricted fund can be restricted by the donor, but also could be restricted by the deal. So for example, if you're all fundraising for
A bed in the hospital.
a new hospital bed, and actually you get more money,
Yeah.
then you've still got to spend that money on the new hospital bed.
Yeah.
So you've either got to buy two and you only need one.
Correct.
Or you can do the kind of like what Oxfam do, children need this money could be spent on, could fund a new hospital bed. And that there's some probably some
Correct.
very clever language you can use, which you can give advice on, which means that then you can spend it on that or something else.
That is one problem we have seen, you know, in the past where we've looked after accounts for charities. You know, they've had a donation in a will for something, you know, specific, but when push comes to shove, they've not spent the last £50 of it.
Yeah. Well, so, yeah. So is there language that you...
I think you're quite right there. You've got to make appeals as wide-ranging or as bland as you possibly can, basically, so that there isn't that underlying restriction underneath it. Because if you are just saying that we you know, this is for the West Wing to redecorate the West Wing of whatever it is, it's got to be spent on that.
Yeah.
Could I ask one final question from this end? You sort of used trustees in charities, then you mentioned directors in charities.
Well, if you're a limited company, then you know you've got directors as well as trustees, basically.
But they're still the same thing.
Still the same.
Effectively, it's the same people, but you'll have a director at Companies House, but a trustee as well, a charity commission.
Right.
That's why.
How does a company exist within a charity?
You know, sometimes limited company charities are quite confusing because effectively you've got to file accounts at Companies House and you've got to submit them to the Charity Commission as well. So you've got to make sure that the directors are kept up to date as well as the, you know, as when there's a trustee change.
But are some of the activities charitable and some not?
No.
It's all charitable.
It's all charitable.
Yeah.
Okay, thank you. I know that.
So, I have a question. We work with quite a lot of organisations, small organisations, who might get, I know, awards for a bit of money, and children need a bit of money, this bit of money, that bit of money, and struggle with then how to do all of the accounts. So some people are like, oh, well, we need to open a bank account for the awards for women and a separate bank account for so-and-so, which we always say, no, don't do that. But, I mean, so you designate them. I mean, I suppose the way that I would think for a small organisation is maybe have an Excel spreadsheet with different tabs along the bottom saying where the money's coming from. But I'd like your thoughts on it.
Keith? Keith, think a spreadsheet like that is probably the easiest way. No, you don't need a separate bank account. No, you do not.
Amazingly the amount of people that do think that they need to something just to keep it separate.
As long as it's a relatively small spreadsheet, I'll do. But if you get a bit bigger, then on your software on Xero, you can use tracking categories to track each individual fund. On Sage, you can use departments, or you can use the charity fund function to track individual funds. So when you're a bit bigger, because I've seen a spreadsheet that's this wide, it goes on for pages and pages and pages, and it turns into a nightmare just trying to track the funds. And they've done transfers between funds and all sorts of things going on. So it just comes too complicated.
So at what stage would you suggest people move from a spreadsheet to a software package?
Well, I'm probably thinking, if you're under 100,000, you could probably get away with
a spreadsheet.
Okay. If you're getting up to close to an independent examination, you probably want to account package. Equally, if you've got 50 funds, it's spreadsheets.
So it's about the turnover, but also the amount of different funding streams.
If you've got, as Keith says,
we've seen accounts, haven't we, where the fund page goes on.
Yeah.
Every time you get a new pot of money, they've got a new fund. That's where we started off by saying, keep that on your own account, but we just want to disclose the material fund.
Okay.
But it's how long it would take, Would you want to run a spreadsheet that's quite complicated?
We have seen some horrendous spreadsheets, charities, awful.
Okay.
Just because of the complexity of the number of the funds that are running.
And tend not to link the income ones with the expenditure ones, because fund balances. You're having to try and find where the income went. If you know what you're doing, the spreadsheet's great. Okay. Be careful.